All right. Welcome, everybody, to Finance 231. This is week one. Welcome. I realize that because the course just barely opened this morning, that sometimes it's difficult for people to get to this very first week of the session. I hope future weeks will have more participants, and I also hope that tonight we have a few additional people who will join, but maybe just a few minutes late. We've got a couple of things we need to cover tonight. As always, we will talk a little bit about the assignment and a little bit about the test for this week so that you feel comfortable with those two things. We'll do that every single week during the sessions. But tonight we need to do a little bit of housekeeping as far as setting expectations, reminding you of what course expectations are. For some of you, this will be a reminder. Hopefully for all of you, it'll be a reminder, but I find that it is helpful to review briefly what those expectations are and how grades overall in a class like this will work. Then we'll cover a few of the slides from Chapter 1, maybe even some of Chapter 2, and then always at the end of the class, we'll take a few minutes to discuss the topics that will be on the test. This week's test is 10 questions. They are a mixture of true, false, and multiple choice. Pretty straightforward, will not take a lot of time, but some of the questions are worded a little bit tricky, so we'll go over those topics that you need to study from Chapters 1 and 2 in order to feel comfortable that you'll do well this week on that test. My name is Dave Shipley. I'm a certified financial planner with Zions Bank. And then as a second job, I have taught through Stevens Henniger for the last coming up on 5 years that I've taught classes online. Always teaching finance classes. This is one of my favorites, though, because we talk about investments, which is what is most applicable to the job that I do day in, day out. And we'll try to help you to apply the things that we're talking about as it pertains to investments to corporate finance as well as your personal finances. So we talked, and I mentioned on the discussion board already this week, as we talk about decision making when it comes to business leaders and investing, there's a lot of crossover. There's a lot of things that are the same, whether or not you're a business leader, individual, whether or not we're talking about investments, or whether or not we're talking capital investments for a company. The bottom line is we want to look at the risk reward or the cost benefit. And when it comes to the investing that we talk about in this class, we'll talk about risk reward. But when you talk about business, you talk about cost benefit. When it comes down to it, we're just trying to evaluate, whether or not it's something that we want to go ahead and accomplish. If that's in business, we're talking about a project. If that's individually, we're talking about different investments that we can make. Okay, so we'll get right into it. As far as expectations, bottom line is, in a class like this and any other class that you've taken online, if you complete all your work, you'll have a difficult time not passing the class. So it'll be very easy to pass a class if you'll just complete all your work. That means all your discussion boards, all your checkpoints, all your assignments, all your assessments. Even if you struggle with some of the assignments and assessments, you'll still be in good shape, still pass the class if you'll just get everything turned in. Those folks who don't pass the class, most commonly it's because they miss some of the assignments. Most people are doing pretty well on the discussion boards. We have quite a few people that do well on the checkpoints and quite a few people that get the assessments done. But for some reason, the assignments seem to be the one that catches a lot of people and prevents them from passing a class or getting the grade that they want. Assignments in a class like this are worth more than a third of your grade. 36% of your overall score comes from assignments. 3 assignments worth 120 points apiece. Just be careful in a class like this that you actually read the instructions, and when it says, for example, like this week, to write 2 to 3 pages, that you write at least 2 pages, because if it's any less than that, I can't give you full credit if that's what the instructions say. Okay? So this week's assignment is asking you to do the end of chapter case study. I believe it's 2.1, but go ahead and check the instructions. It's at the end of the ebook chapter. So if you just scroll to the end of the ebook chapter on the e-text, then you'll get to that assignment. It's got 3 or 4 short answer questions after the case study. And what the instructions ask for is 2 to 3 pages of essay-style writing. So it's a little bit of a stretch for you, but what I want you to do is make sure that you follow the instructions and create at least 2 pages of writing from those short questions. Instead of giving short answers, which is the format that you probably expect to do on a case study when it's got short questions like that, what I'd like you to do is think through the questions, think through the case study, and then write in essay format an essay that answers those different short answer questions in at least 2 pages, double spaced, the regular, APA format, traditional formatting. You need a cover page, of course, you need a reference page, but those do not count towards your full 2 pages of writing to get full credit. So that's this week's assignment. If you read through chapter 2 briefly before you do the assignment will, that'll give you some context for that case study. And then if you study that case study and create some of that case study, you'll implement into your essay, of course, and then, do a little bit of research as well. Add the research, add your opinions on the different case study questions, and you'll be in good shape. So that's this week's assignment. If you have any questions or concerns, make sure and let me know. Zip me a quick email and I'll respond. Speaking of email, that is the very best way to communicate with me. Because I have a day job, I'm not always able to answer my phone throughout the day. I'm usually in appointments. And so the easiest way to communicate with me is to zip me an email and I'll get back with you within a day. And hopefully even sooner, and get you some answers to any questions that you have. We do have a tutor for the class. I'll be posting her introduction video for Lindsay Hawes, as well as her week 1 announcement as far as when she'll have a standardized time. But she's always willing via email or via phone to set up a separate time, as long as you give her advanced timing. Don't call her on Saturday afternoon for an assignment that's due Saturday night. She tends to get bombarded on the weekends, and she has, obviously, she like the rest of us, she's trying to do things with her family and has a life as well. So we try to respect that. If you'll look at the instructions early on in the week and take a stab at the assignments early on in the week, you'll then find that the tutor can add a lot of value, because she usually holds sessions on Wednesday or Thursday, so you'll be able to attend that session, ask any questions that you have, and get some good feedback or help. Or you'd be doing it early enough so that you could actually email her or call her and get a one-on-one session if that's what you needed as well. So that's Lindsay Hawes. I'll be posting her information probably tonight, along with the recorded session and some other announcements that will be on the announcement board. One other quick thing, as you probably all know at this point, the college does a program called Summer Sizzle, which is basically, the idea is to try to get all of you engaged, even though it's summertime, in your classes. And so they do drawings, they give out prizes, and it's worth your time and effort, maybe a little bit of extra time and effort each week, to make sure that you've got all your assignments completed, because it's your assignment completed on time that gets you in the drawing for some of those prizes that they're giving out. Okay, so just be aware that that's going on. I think that's a good little side motivation for getting your stuff in on time. Having said that, I do accept all work until the end of the course, meaning I do accept late work. I do not give full credit for late work, and so if you'd like full credit on an assignment or assessment or discussion board, you complete them according to the instructions, and you should be in good shape. If you complete things late, that's still okay. I still accept it all the way up till Saturday at midnight in week 4. However, you will not, as I mentioned, receive full credit. You'll receive most of the credit and just get a discounted score based on turning it in late. All work will be graded by the following Tuesday at noon. Even though school policy is Wednesday at noon, I usually can get everything done by Tuesday at noon. So you will get all on-time work returned with notes by Tuesday at noon. However, late work, there's no guarantee how fast I'll get to late work. My priority is always on-time work, so we'll go ahead and get that back to you as soon as possible. Welcome, April. Can you hear me okay? Awesome. So we've been doing some housekeeping expectations. You can listen later, the first 5 or 10 minutes and get some of that information. But we're right in the midst of talking about how I do accept late work in this class. I just don't give full credit for late work. And then Saturday at midnight on week 4, as is the case in probably all the classes you've taken, that's a hard cutoff, meaning I can't accept anything after midnight on that last Saturday in week 4. That's school policy. I have to get my grades together and get them back to the school, so we can't accept anything after Saturday at midnight on that week 4 of the course. Okay? So pretty straightforward. Obviously, for full credit, we got to turn things on time and follow instructions, but for most of the credit, you can turn things in late. I always encourage people, of course, to stay caught up. It's a lot easier that way. Then you can focus on things as they come, and then you don't risk getting into week 4 and not having enough time to pass the class because you just run out of time to get everything done. Okay, so obviously that's ideal. The ideal is to, turn everything in on time, but I also realize that in a class like this that goes so fast, it's very likely that you'll have computer issues or family issues or health issues or work issues. There's all kinds of things that can come up every week, and so we try to give some leniency to things coming in late. Having said that, I'm not, I don't make exceptions to that late rule. No matter what the circumstance is, we're going to get a discounted score if we don't turn it in by Saturday at midnight each week. Okay, so that's work and turning work in on time versus turning work on late. Now, I mentioned that every Tuesday by noon, I'll have all the grading done for on-time work. I'll also give you feedback on assignments and discussion boards on ways that you potentially can resubmit or edit for additional points. So, for example, if you turn in the assignment this week, we talked about this earlier, April, that the assignment for this week is in essay format and needs to be at least 2 pages of writing long. That's not counting the title page or the reference page. So let's say you forget that or didn't review this session or didn't review the instructions carefully and you turn in a 1-page assignment. I can't give you full credit, and I'll say as much. The paper is light of the requirement. However, if you'd like to resubmit, you can for additional points. Let's say you turn it in the full 2 pages a few days later, then I'll be able to give you most of the points for that assignment and add some additional points to your score. So just be aware of that. It's important, I think, every week to review the scores and the feedback that you receive in the gradebook so that you know if there's a way to resubmit an assignment or edit or add some additional posts to a discussion board, how you can do that to get additional points, additional credit. Okay? So a lot of classes will not allow you to resubmit assignments. I allow resubmission on assignments as long as the first time around they were turned in on time. Okay? So as long as you turn an assignment in on time, you have the right to resubmit if there's anything wrong with it for additional credit. And that's just to make up for the fact that sometimes we just blow an assignment, not by any fault of our own. We just miss something in the instructions or we just don't understand something. And so I like to give an opportunity to resubmit and retry, and especially giving some feedback, on how to do it. That might help you to accomplish a better score after that. Okay, so that's assignments. We talked a little bit about the assignment that's due this week, April, before you came on. So just carefully read those instructions to make sure that you can get the bulk of that credit. We talked about how assignments make up about 36% of your overall grade. So over a third of your grade comes from the assignments, just those 3 assignments. So they're very important to your overall score. And it always ends up being a sticking point on people whether or not they get the grade they want or whether or not they even pass. It usually ends up being the assignments that are the culprit. People not turning in assignments or missing an assignment or 2 that prevents them from getting the grade or even passing the class. As far as discussion boards, shouldn't be anything out of the ordinary on discussion boards. I cannot give full credit unless we have, 3 different posts, unless we turn them in all in or complete them all by Saturday. We've got to have 1 post completed by Wednesday at midnight. This is all just school policy. We've got to have at least 2 different days of participation. That initial main post needs to be at least 2 to 3 paragraphs with at least 1 reference. And this should all just be a reminder. None of this should be a surprise to any of you. However, I understand that there are some professors that might be more lenient on school policy, or even some, that might be harder than school policy when it comes to discussion boards. I just match up exactly with what the school has communicated to me to be the expectations, which, like I say, it's very simply 3 posts, 1 main post that's 2 to 3 paragraphs with at least 1 reference that's done by Wednesday, at least 2 days of participation, and at least all 3 posts completed by Saturday at midnight if you're trying to get full credit on the board. Okay, so discussion board is one of the easiest way for points. I don't know, April, if you'd agree or disagree with me. I think the discussion board and checkpoints are just really, really simple ways to stay involved in a course and to get, a lot of points without having to do a lot of real intense work. So I just strongly encourage you all to stay consistent on discussion boards and make sure and get those early posts in, because you get a lot more back from the discussion board if you're involved early on the discussion boards each week. As is normal for these courses, you'll have a discussion board in weeks 1 through 3. You'll have assignments in weeks 1 through 3. And then in week 4, all you'll have is your normal checkpoints and the final, but you won't have a discussion board or an assignment that final week. That should be fairly standard with other courses that you've had, so nothing new there. As far as checkpoints is concerned, just stay consistent with them. Find a time every day. If you haven't at this point in your college career, just find a time every day that you can go in and just spend 30 seconds to get those 5 points. Very simple way to get almost 20% of your grade in a class like this. And perhaps more importantly, a very simple way to get about a half a letter grade of extra credit. So if you'll stay consistent and do the 2 or 3 extra ones each week, okay, more than just the normal 4 that you do. If you'll do those 2 or 3 extra ones each week, that gives you as much as a half a letter grade of extra credit in a class like this, which serves as a very nice buffer to help you to make up maybe for a bad test or something like that. At least is my experience with my own classes that I've done in a format like this. The checkpoints really, really help out to give me the points that I need to get the score that I want. As far as the tests in this class, you're going to have a week 1 test, and I've already mentioned this, April, a little bit earlier on. It's 10 questions mixed between multiple choice and true false. Pretty easy test this week as far as the timing is concerned. And I shouldn't say easy. I meant to say a pretty short test as far as the timing is concerned. It may trick you into thinking it's an easy test because it's true, false, and multiple choice, but there are some tricky questions, some tricky wording. Just be very careful that you read always, in tests like this, even if it looks simple and straightforward, that you read and reread the question so you don't get a poor score just because you didn't understand what the question was asking. But we'll have a test this week that's worth 50 points. Next week will be the midterm worth 100 points. It'll be a review of both 1 through 2, which are the chapters we're going to be covering today, as well as next week's material, which is chapters 3 through 4. Okay? So that is next week's midterm, worth double the points, 100 points, and covering 4 different chapters. Week 3 is just a normal test, back to 50 points and just 2 chapters. And then week 4 is your final, of course, and the final is comprehensive. It's worth 180 points, so almost 20% of your grade comes from that final test. And we'll review each week, as we will tonight. We'll give you a demonstration of that tonight, April, but we'll review each week the topics that you need to know for each week's test. Okay? So you'll know what chapters you need to read from and that you're responsible for, and I'd strongly encourage you to read them. But I find that if I know the topics that I'm kind of searching for as I read, then I can pay extra attention to those topics, and usually helps me out for a test if I'm kind of doing organized study or more specific or concentrated study or focused study, as we'd call it, for a test when I already know the topics. Okay? So we're going to be covering the test topics tonight after right before the end of the class, and that will be consistent every week during these sessions, that you will get a review at the end of class as far as the topics that will be on the test that week. All right, so April, you're a little late tonight, but and not to put you on the spot, but any questions or concerns about any of the stuff that you were here for over the last 5 or 10 minutes as far as information about the class? Okay. Thank you for joining, by the way. I appreciate that. I mentioned at the beginning it's a little difficult when you have a class that comes open to you this morning, right, to go ahead and make a live session that same exact day, and maybe have to move a little bit of move plans around a little bit. Are you on the East or West Coast, April? What time zone are you in? Oh, good for you. So Arizona, so not too bad. There are people obviously in a class like this usually on the East Coast, and I realize 8 o'clock is going to be a late time, a really late time, but you're not too bad there, just an hour different. That's not too bad. Okay, appreciate you being here though, like I say, and hopefully you don't feel picked on if I ask you a question here or there, just to engage you and make it a little bit more, make it a little bit easier for me to teach the course when I have somebody to interact with once in a while. I'll try not to put you on the spot too bad or make it too hard, but I'll be anxious once in a while to ask you a question or two. All right, so we're looking at this week chapters 1 and 2, as I mentioned earlier tonight. We're going to cover a couple chapters every single week, so not a ton of material. The problem is each one of these chapters has about 50 or 60 slides, so more content than we can cover in an hour session. So tonight, if I were to guess, I think we'll make it through most of chapter 1, but probably not much of chapter 2, if any. And then I'll post the slides so that you can review them in your own later, along with the reading, of course, that's required for the material each week, which are just the chapters in the ebook. If you have any concerns about the ebook, I think the ebooks are doing pretty well these days. Used to be just a few short years ago that people really struggled to get access to their ebooks. There used to be a lot of errors with the ebooks, but now it seems like they're pretty good, and usually we can get in just fine. So, but if you have any challenges, obviously I would encourage you to contact the school first, but let me know if you're struggling to get into the class or struggling to get into the book at some point. All right. Do we get the ebook help things? I don't know. Sorry, I don't know what the ebook help things are. Like, is that some kind of like Cliff Notes or something like that you've had in previous classes or something? I'm not sure what you're asking for. Do you mean just if you have problems with the ebook? Oh, yeah, I don't know actually. I don't know any extra help for the ebook. I'm not familiar with this class, so I'm not sure to offhand if that's available or not. I haven't had students in this class in the past tell me whether or not there were any kind of helps like that. I think in like accounting, some of the accounting classes and some of the other math and finance classes, they'll have, extra links that you can go get additional information regarding the text. I don't believe that there are those links in this class, but I may be wrong, and if I am, please let me know so I can get that information out to everybody else, okay? All right, so when we talk about investing, in general, we're talking about, making some kind of investment, and we're going to back up and really talk about some very foundational things about investing. And I say foundational because some of you, as you listen to this, or maybe even you, April, might think about what I'm saying and think to yourself, well, this is just really straightforward. This is very easy. This is rudimentary, elementary. But it's important for us to cover this information so that for those of you who are just very unfamiliar with how investing works, at least you have some basic working knowledge. So what is an investment? It's any asset, okay? It's anything we can put our money in where we can generate positive income or a positive increase in value, okay? So, and or a positive increase in value and or a positive increase in income. Okay, so with that definition, something like a rental property, right, would be an investment, right? It's something we can put our money in, and then we get our rents, right, each month, our rental check each month. We also benefit from the value of our property going up. So in that case, it has positive income potential and an increase in value potential. What about a savings account at the bank? We don't really have the potential for our dollars in our savings account to grow in value. What we do have the potential of is for them to grow based on income coming into the account, getting interest income, right? So let's say the savings account right now, the average savings account across the United States in a bank pays 0.2%. So that's 1/5 of a percent. My savings account then, if I've got $100 in my account, will grow by 20 cents a year. Pretty pathetic, huh? So I'll grow by 20 cents per year if I have $100 in my savings account and I get 0.2% on my savings account. So that's generating positive income. It's not generating a value change, though. The same dollar that I put in the account is the same dollar I put in the account. That dollar is not expanding or growing or changing in value. What they're doing is paying me some interest, paying me some basically money for my time to rent my money because they're using it to lend out to their customers while it's there. So they pay me for that. That's why I get paid on a savings account. So an investment is anything where I have the potential for return, and return can be two different components, okay? And it delineates or differentiates them here: income or increase in value. Okay. So when we say total return, we're talking about income and change in value. When we talk about value return, we're just talking about the valuation of the actual asset itself. And when we talk about income return, we're just talking about the income, whether it be interest or dividends that we can receive from an investment. Okay. So one of the things that I like to point out here is the fact that most of us, when we think about investments and investment advisors, we think about them trying to sell us on the stock market, right? Trying to help us invest in the stock market. Reality is the term investment can be very, very broad. It can be anything that has the potential for increase in value or interest income. And let's look at some of those examples and categories that they're placed in. So we've got securities like stocks, bonds, and options. So when we refer to the word securities, we're talking about instruments like stocks, like the stock market, bonds, companies issue debt, and options, which are derivatives, called derivatives, which derive their value from underlying stocks or bonds. Okay, and then you've got real property like land and buildings, or like a rental property like we talked about. And then you've got tangible personal property like gold, artwork, any kind of precious metals, antiques, collectibles, stamps, coins, cards. There's all kinds of things that we can collect, that are collectibles that hold value, that have value. Okay, and all those kinds of things can increase in value. Even if they don't pay interest, they can increase in value, and so we can consider them an investment. There's a common saying out there that your home is not an asset, or that your home is not an investment. But in the terms of how we're defining investment, okay, there's reasons why people say that. But in terms of how we are going to define investment for a class like this, anything that has the potential for value increase, which your home does, anything which has the potential for value increase or interest income is considered an investment. Anything that does not have the potential for interest or for value change, then it's not an investment. So let me give you an example of a non-investment. Let's say I put my money in a non-interest-bearing checking account. Is there any potential in a non-interest-bearing checking account for me to get income or gain from my deposit in that checking account? The answer is no. So can we define a checking account that's non-interest-bearing as an investment? The answer is no. Okay? Because it does not have the potential for interest or value change. All right. So when we talk about direct investments, we're talking about me going out and buying a property. If it's indirect, it's me buying into maybe a real estate investment trust where somebody else buys and sells and manages the property for me. Another example is I could go and buy a stock, an individual stock in Walmart, or indirectly I could buy that Walmart stock by buying a mutual fund like American Funds Growth Fund of America that buys Walmart stock inside of it. So a mutual fund is a good example of an indirect investment. An individual stock is a direct investment. And those are some examples of both. Both are very common. Indirect investments traditionally will add a layer of management and a layer of cost, but add a layer of diversification as well beyond what you would get from a direct investment. So the reason that indirect investments like mutual funds exist is because they allow us to invest smaller amounts of money, be highly diversified, and also have professional management. Where if I go out and try to invest in individual stocks or bonds myself, I might not be as diversified. I don't have anybody else helping me manage it. And so those are just some basic differences. Okay, not a right or wrong. There's not a right or wrong between them. Both of them have pros and cons, and limitations and abilities. All right, so this is just an interesting graphic. We don't need to spend a lot of time on this, but the bottom line is, in the United States, it's very common for households to own stock directly. Okay, many countries it's very uncommon to hold stock directly. But in the United States, it's very common for households to have stock and direct stock ownership. In fact, 1 in about every 3 households will have some form of stock ownership. So in a class like this, if we have 30 people, statistically about 10 of us would have stock ownership. I find that the statistic is a little bit lower for classes like that. That's because a lot of us, have not yet entered into our careers, or have maybe had stock in the past, but now we've sold it and we're just getting our degree so that we can go back into the workplace and get a better career opportunity. If that's the case, maybe we'll have stock in the future, but maybe we don't have it yet. Okay, and you notice some other countries here, very uncommon for people to own stock. Even in a country that's very developed and well respected like France. Well respected might be debated, but for purposes of this class, it's a first world country, right? It's a very good It's a good, strong economy. Kind of a weak economy actually, but a big economy anyway. And the point that I'm trying to make is that even though it's a modern society in France, very few people in that country have direct stock ownership. Okay, Canada and the U.S. have very high stock ownership. We talk about bonds, we're talking about debt, so we can use those two terms interchangeably. So when I say debt, I can be referring to a bond, or I can say fixed income. Okay, so all three of those words, debt, bonds, and fixed income, all mean the same thing. They're just talking about an instrument where one party is borrowing from another party and promising to pay back with interest over time. So debt, on my house is a promise from me. My mortgage is a promise from me to repay the bank over time with interest, right? For the right to get that cash so I could buy my house. That's a mortgage. So that's debt. A bond is an instrument that a company or a government will create to borrow money from you and I in order to do something. So federal government borrows money from the world and from you and I in the form of savings bonds, okay? And they use that money for general purposes of the economy, of the government, defense spending, education, and otherwise. So in any given year, as of a few years ago, we were in a situation where we had about a $3 trillion budget, and about $1 trillion of that was borrowed money. Okay, so we had about $2 trillion in tax revenue, and then we were borrowing about $1 trillion in bonds, creating about $1 trillion in bonds, which are future obligations for our country to repay, and we have to pay back with interest in order to keep the government running. Okay, and good or bad, that's governments and businesses borrow money all the time to grow and to operate, and then they promise to pay us back over time with interest, and that's what a bond is. Fixed income is just another way of saying bond, because fixed income refers to something that pays us interest over time, like a bond. So if I have a mortgage and I'm a bank, that's a form of fixed income when I have that mortgage, because what is the person that has that mortgage going to do? They're going to pay me a fixed income. They're going to pay me a fixed amount of interest each month until that loan is paid off. Okay, so fixed income, debt, and bonds, all the same thing. We talk about equity. That's a synonymous word with stocks. So stocks are equity. They're equity ownership in a company. So if I buy Walmart stock, I actually have equity ownership in Walmart. Now, if I buy one share, I probably have I don't have a lot of ownership, right? Because there are millions of shares out there. So one share is not going to get me a whole lot of power. However, folks like Warren Buffett, and I'll refer to him off and on throughout this course, but Warren Buffett is the most successful investor of all time. He's the richest man in the world from investing in stocks and different companies, okay? So Bill Gates is actually richer, but Bill didn't make all his money from investing. He made it from starting a company, right? So Warren Buffett is the most successful investor as far as just the raw numbers of all time. And when it comes to Warren Buffett, what he's trying to do is buy equity ownership in different companies and benefit from that equity ownership, as those companies grow. Well, Warren Buffett is so wealthy now and has so much money that he can buy enough stock. He can buy 5 or 10 or 15% of a company by amassing enough of its stock. And when you have that much of a company stock, you actually do have quite a bit of power. The power to be able to say yes or no to mergers and acquisitions, to affect stock dividends, to affect the board of directors, all kinds of power when you've got that much ownership. Bottom line is, even on a small scale of a stock, you are an equity ownership. There were commercials some years ago, I think it was for E-Trade, one of the online brokers, where you had all these people walking around saying, I'm an owner of Walmart, I own Google, I own, and they were saying all these companies, and it was just people who had bought stocks, right, and were saying, I'm an owner in that company, but they were saying, I own Walmart, I own Target, and it was just kind of a funny commercial because these people are acting like they're a big deal, and it's because they own stock, and they really do. It's true that they own equity ownership in that company, even if it's small. Okay, not going to spend a lot of time on derivative products. Derivative products derive their value. The reason we call them derivatives is because they derive their value from some underlying asset, some underlying product. And when we hear those late night infomercials about options where you can make money whether or not the market goes up or down, in theory that's true. In practice it's very difficult and very risky. So I don't spend a lot of time on derivatives because the last thing I want to do is get you all excited about doing something when it comes to your investing that's very aggressive and very risky, very speculative. If you do derivatives, I'd want you to have a lot deeper understanding of the products and the risks associated with them, so we're not going to spend a lot of time there. When it comes to just differentiating between low risk and high risk, the bottom line is risk is the uncertainty of getting some kind of return. And so, you may think of risk as I'm going to lose all my money, but when it comes to investing, most investments have very little risk of you losing all your money. What they do always have is they have other risks, right? And those risks create the uncertainty of the result that you're trying to accomplish. So when we talk to a customer or a client about investing in the stock market and averaging 8% over long periods of time, compounding 8% rate of return, most people say, well, that's great. 8% would be awesome. That's excellent. Where do I sign? But then we start talking about the risks and the fact that it's very rare that the stock market ever actually gets 8% in a year. It'll average 8% over the long term, but some years you'll go down 30%, and other years you'll go up 30, 40, or 50%. And every other year will be somewhere in between, right? It'll be all over the place. So even though you're averaging 8%, the likelihood of you actually getting 8% in any given year is fairly low. Every year is going to be significantly higher or significantly lower than that amount. It's much more of a roller coaster. And that's the risk or fluctuation that we've got to be familiar with or aware of before we invest. At least we need to understand it. It doesn't mean we have to like it. I would venture to guess that 99% of the population doesn't like when their stock market account or when their 401k or IRA or their mutual funds or stocks go down. We don't like that. That we're the natural person's not going to like when their value goes down. However, if you're a smart investor, you're going to be patient with that because you know that in the future that that everything cycles and that will come back up. And so instead of panicking and selling when things go down, you'll hang on or even add money and wait for things to come back up. Okay, so risk is the reason why we get rewarded from the stock market, from different investments. If there were no risks associated with investing, then the reward would be like a checking or savings account, very little, right? Because we should get paid commensurate for the risk that we take. That's why the stock market returns such a good return over long periods of time, because it's risky as far as fluctuation risk. Now, we also need to break things down as far as short-term and long-term. When it comes to taxes, short-term means less than 12 months. Long-term means over 12 months. If you hold something longer than 12 months, you'll have what's called long-term capital gains and pay potentially a lower tax rate than your income tax rate. If you have things for less than 12 months and sell them, like if I buy a car tomorrow and sell it 6 months later and make money on it, that would be a short-term capital gain, which amounts to income taxable money. Okay, if I held that car for longer than a year and then sold it and made money, which you never make money off cars, but let's say it's a collector car and it actually did increase in value. If I had it longer than a year, then I'd pay capital gains on the difference because I'd held it longer than a year. It's considered a long-term investment and I pay less in taxes. So the tax system is set up to benefit people who are willing to be long-term investors and actually punish people who are trying to be short-term investors. That's just how the tax system works. Keep that in mind. When we talk about different types of investing, we talk about domestic or foreign. Domestic being U.S. based. If we're here in the U.S., that would be U.S. based investments. If we're based in Australia, that would be Australian based investments would be domestic if we lived in Australia. For purposes of this class, we'll assume that we're all here in the United States, and so any U.S. based company is domestic. Any non-U.S. based company like Nestle, like Alibaba, like, there's just all kinds of them. Companies out there that are not US based, like BMW and Toyota. All these companies are foreign companies because they're based in other countries other than the United States, controlled by laws and currencies and rules and regulations that are not US based. Okay? And then another subcategory of foreign and domestic, just so you're all familiar, April, and I think this is helpful when it comes to like a 401k plan as you're evaluating, because some people really get confused by what their 401k plan has inside. So let's take just a second and divide domestic into 3 categories and divide foreign into 2 categories. Okay. Domestic 3 categories are small, mid, and large cap. Okay. So small cap, mid cap, large cap, those are 3 domestic categories. And what that means is small capitalization, mid-sized capitalization, and large capitalization. And it's pretty intuitive that the small capitalization are small companies, mid-sized companies, and large are large companies. April, offhand, do you want to take a stab or a guess at which one of those 3 is going to be the least risky? Small, medium, or large companies? Which one is probably the least risky? Okay, kind of a trick question, because actually large companies have less risk than small companies. And let's give you an example of that. A company like Walmart, for example, has less risk of going to zero or going down significantly than a company like Nu Skin in Utah. Yep. Because Nu Skin in Utah is a small company. If something big happens, like if operations in China basically shut down like they did about a year ago, it really has a material impact on Nu Skin's ability to make money. But if you're Walmart and China shuts down, you're still going to be making lots of money and do just fine because you're such a big company. So the least risk companies are the large cap companies. Now, the highest potential for growth are the small companies. Okay? Highest potential for growth are the small companies because they can grow faster because they're starting out smaller. And then finally, one more thing to just consider is the fact that when we talk about blue chip stocks, we're talking about large cap companies. So blue chip stocks, that's a reference to large cap companies. And also when we talk about the Dow Jones or the S&P 500, S&P 500 is an index or a collection of the 500 largest companies in the United States. The Dow Jones is only a collection of about 30 of the largest companies in the United States. Both of them are large cap indexes that reflect what large companies are doing. So when you see the Dow went up 30 points today, or like today, the Dow went down just over 100 points, that means that the collection of those 30 companies that are part of that large cap index that is the Dow, that we call the Dow, went down that day. There might have been some of the companies in the Dow that went up actually, but the overall general direction and average of that particular index was down, and today it was down. Okay? So that's what the Dow and S&P are, is large cap indexes that reflect what the market as a whole is doing day to day. That's why people track them, and you see them on the news and hear them on the radio if you're listening. Then we break down foreign stocks into 2 main categories. You've got developing and developed. Okay? And usually we refer to developed foreign investments as international. Okay? Just international. So when it comes to investing, and I know my handwriting's horrible, but that's international. When it comes to investing, an international fund is going to be investing in countries, that are highly developed, like Japan, the U.S., Canada, Australia, Germany. That's what you get when you invest in an international fund. Okay? When you invest in a developing markets fund, or what we refer to as an emerging markets fund, okay, emerging markets fund, then you're investing mostly in what we refer to as BRIC countries, okay, BRIC, which stands for Brazil, Russia, India, China. Okay, Brazil, Russia, India, China. Now, there are a lot more emerging markets than those 4, Brazil, Russia, India, China. However, they make up the majority of what's referred to as emerging market investments. Okay, so if you have an emerging markets fund, it's probably got a significant chunk in Brazil, Russia, India, China, and then maybe a small chunk in some other smaller countries. Okay, so that's what you're investing in based on the type of mutual fund that you have. If it's a small cap international fund, that's small companies in international developed markets. If it's a large cap emerging markets fund, that would be a large company fund in emerging markets like Brazil, Russia, India, China. So those are just some examples. Okay. All right, and if you understand that, you know more than about 90% of the people I talk to, because when I talk to people about their 401ks and IRAs and I ask them why they have the different investments they do or what they think they have, most people can't answer that question. They have no idea what these names of these different mutual funds and categories are. It doesn't make any sense to them. So well educated coming away from this one slide tonight as far as different investing categories are concerned. But there's more to learn. Okay, when we talk about the marketplace, okay, we've got suppliers and demanders of funds. And individuals, companies, and governments at any point can be both suppliers and demanders at the same time. Okay? However, the book is very careful to help you understand that each one of these categories, government, business, and individuals, are either net demanders or net suppliers to the capital markets. Meaning, government and business, for example, are net demanders. On the whole, even though they provide some capital to the marketplace, they are usually the demanders, the ones who are taking capital from the marketplace. So as I mentioned before, our federal government, and it's not as much now, it's more like $600 billion of a deficit each year. But that $600 billion, they have to borrow from somewhere. So they're net demanders of equity, of capital. They're net demanders of funds, and they borrow that money from individuals in other countries like China, okay, to make the payroll as a government. Businesses, same kind of situation. As they're growing, they're borrowing money, so they're net demanders of funds in order to grow their entities. Individuals, however, and this is where you need to remember this for the test this week, and I'm pretty sure it's on the midterm and the final as well, so it's a concept that you need to feel like you understand basically, which is that individuals are net suppliers of funds. So governments and business are net demanders. Individuals were the ones that make money from a day job and then let the bank and let government and let businesses borrow our money and pay us interest in order for us to have a place to put our money and save and invest, okay? So individuals are net suppliers, government and businesses are net demanders. Talks about how that happens, talks about different kinds of investments. Let's go back one slide real quick because I do get a lot of questions about exchange traded funds, or what's referred to now as ETFs. So most commonly they're referred to as ETFs. They're a variation of a mutual fund. Okay, mutual funds have been around for a long time. That's a collection or pooled investment where a professional manager invests in different stocks and bonds, mixes them, and then sells them to you or I as investors. And we get the benefit of being highly diversified and having professional management for us in those types of investments. However, mutual funds only trade once a day, and they trade at the end of the day, okay, after the market closes. Exchange traded funds are relatively new. They've been around for the last 10 or 15 years, but basically they're a hybrid product. And what they are is, if you invest in an ETF, you've still got a pooled investment. Majority of the time they're unmanaged pools of investment where they're basically automated manager, computer generated management. And they're usually lower cost than the average mutual fund, so that's appealing. And the other thing that can happen on ETFs that cannot happen on a mutual fund is ETFs can trade what's called intraday. And what that means is I can trade an ETF, I can buy into it or sell it just like a stock throughout the day, and it reprices all throughout the day based on supply and demand. Where a mutual fund does not reprice all throughout the day. You cannot trade it all throughout the day. You can only trade it once a day at the end, like we talked about, and all you get is whatever the market closed at. So if the market's really bouncing around up and down, sometimes in mutual funds, you just have to take whatever, however it ended. And sometimes that's a bad thing in mutual funds. Most of the time it's not an issue, but sometimes it's a bad thing. So ETFs allow you to buy or sell in the middle of the day whenever you want as the trading day is going. So if you're in Arizona, the trading day would start at 8:30 in the morning. It starts 7:30 my time, so it'd start 8:30 your time. And then it would end at 3 o'clock your time. It ends at 2 o'clock my time. Okay, April? So the stock market is controlled by the exchanges back east in New York, and so that's why they open the way they do. You are right. So it's exactly the opposite of what I just said. I was thinking for some reason that you're behind, but in front of me, but you're behind me. No, and that's right. And so so I was right just now. So our market opens at 8:30 here, our time. the stock market opens 8:30 our time. It opens 9:30 your time. Okay? I think. What time is it your time right now? Are you at almost 10 o'clock at night? Nope, you're the other way around. Okay. So you're along with California, okay, will have a situation where your market will even open earlier than me. So your market will open at 7:30 in the morning and get done at 1 o'clock in the afternoon. So stockbrokers might, go in really, really early in the morning where you're at, and then leave late. I'm Mountain Standard Time. That's why I don't understand why you're a different time than I am. You're confusing me because I'm Mountain Standard Time. Huh. Well, either way, if you're almost 8 o'clock where you're at, that means that that the stock market where you're at would open at 7:30 7:30 in the morning, and end at 1 o'clock in the afternoon. Okay. All right. So let's talk. That's where I want to end, actually, because we've only got about 5 minutes left, and we need to go over the test for this week. Okay, so for the test for this week, as I mentioned before, is just 10 questions, multiple choice and true false. So let me give you a couple, let me give you the topics that you need to know so you can make note of that. And as you read, and I guess, April, you've already read, good for you. You might want to just rescan now that you're going to know the topics that you're going to need to know for the test so that you can be well prepared. Number 1 on the test, just ask what capital markets include. So when we refer to capital markets, what does the book define as the capital markets? Is it stocks? Is it bonds? Is it stocks and bonds? Is it all kinds of different investments? What are capital markets? Okay, so you'll want to know that for question 1 on the test. Number 2 on the test, you're going to want to know what trades in the capital markets. So what is the capital markets and what trades in the capital markets for number 2 on the test. Number 3 on the test, okay. Number 3 on the test is asking about IPOs, okay, and an IPO is an initial public offering, and they're asking a question about a quiet period. What is the purpose of a quiet period? So you'll want to go into the text and find what a quiet period is for an IPO and why the SEC wants us to have a quiet period for an IPO, and that will help you get number 3 right on the test. Number 4 on the test asks you to have a basic understanding of pricing when it comes to IPOs. Why are IPOs sometimes expensive? Why are they cheap? Why do they go up the first day sometimes? The book talks about that. You'll want to have a basic understanding of pricing when it comes to IPOs or initial public offerings. You'll want to understand as well how stocks get listed and then have the potential for being delisted from exchanges. So when we say an exchange, we're talking about something like the New York Stock Exchange, the NYSE. Probably heard of that back in New York City, the New York Stock Exchange, one of the most popular stock exchanges in the world. That's why New York is considered the epicenter of the financial world, because in part, the New York Stock Exchange is one of the largest stock exchanges and most well-known stock exchanges in the world. Well, companies actually have to apply to be listed on the New York Stock Exchange, and they're motivated to do that because it gives them a lot of street credibility, to be listed on such a widely known exchange. The flip side is, if you're listed on the New York Stock Exchange, you have requirements that you have to meet, and if you don't meet them as a company, as far as your reporting, as far as your registration, as far as your compliance, if you don't meet those requirements, then you can be delisted and kicked off the exchange. And companies every year, get delisted from exchanges like the NASDAQ, the New York Stock Exchange, and others for not meeting the minimum requirements of those exchanges. So just keep that in mind for the next one on the test. That was number 5 on the test. You're going to want to know about being listed and delisted from an exchange and how that works. Number 6 on the test is asking about debt. We talked about how debt, bonds, and fixed income are all a similar principle. Okay. You'll want to know what the book says, how the book defines debt, so that you get number 6 right on the test, where it asks you to basically define debt. Number 7 and number 8 are back to this slide that I told you need to know for this week's test, which is about individuals, companies, and governments, and whether or not they're net suppliers or net demanders of capital. Okay, so just make sure you have in your mind individuals are net suppliers, government and businesses are net demanders. Number 9 on the test asks you what are instruments are traded in the securities market, so make sure that you understand the answer to that question based on what the book says. And number 10 on the test asks you to understand what are the most liquid investments out there, which is a slide that I looked at, but we didn't cover from chapter 1. So you'll want to understand what is liquidity and what are liquid investments, and then what are some examples of the most liquid investments out there. So when we talk about liquid investments, we're talking about short-term ones, okay? So short-term investments are considered the most liquid because they can be changed into cash most quickly, okay? Where other investments take longer to change into cash, and because of that, they're not as liquid. So a rental property is a lot harder for me to get my money out of and sell than, say, a money market account at the bank. Money market account, I can transfer into my checking and use it that same day, where if I own a property, it's probably going to take me a few weeks at least to sell it, and then on top of that, maybe even a few more weeks or months to get my cash. Okay, so real estate is relatively less liquid than something like a money market account or something that's very simple to get at. Okay? All right, so those are all the concepts we wanted to cover. That's what you need to know for the test. Do you have any questions or concerns before we wrap up tonight? Jacob, thanks for joining. We are just about to be done. Questions or concerns, April, before we wrap up? Okay. Yeah, have a great week. Thanks for joining again. We'll hopefully hear from you this next week, and we'll look for your assignments, assessments, discussion boards this week. No problem, Jacob. Go ahead and catch the recorded session. I'll be posting that here over the next hour, and you'll be able to listen to the whole thing. Welcome to the class, though, and have a great night. Yeah, no worries, man. You'll be just fine because you'll have that recorded session. All right, man. We'll talk to you later.